Let's address now one asset class which is clearly seeing a lot of flux because of the current West Asia crisis. And who better than Saurabh Gadgil, the chairman and MD at PNG Jewelers, joining in to talk about how Indians are perceiving gold right now. Saurabh, hi, morning. Great to have you on ET now. Saurabh, we've often chatted about, the safe haven resilience that gold brings. But because of this West Asia war, and now the flux that you're seeing even in gold prices, tell me, how do you think gold prices are going to move in the next, 10 to 18 months, if at all one has that visibility?
Good morning. Like you rightly said, this year has been a year of gold prices moving up and down, and it still continues as we end the year. What we are seeing right now is a lot of interest in crude oil, a lot of positions being built up in crude oil, and a lot of profit booking happening in gold. So that is why you've seen gold prices correcting, which was expected looking at the way the crude prices worldwide are shaping up. But I think fundamentally gold remains to be in the bullish belt. Uh, the parameters due to which gold had risen continue to be the same. In fact, they have multiplied with the crisis. The fear of the fear of dollar de-dollarization, the fear of global inflation going further up, all support gold. And I think once the war somewhere reaches a conclusive end, gold should start a rally and gold should move up from here again. I'm personally looking at in the next 15 to 18 months, gold crossing 2 lakh rupees in Indian currency. But I would just say that, as of now, gold is in a volatile zone, and we are seeing people starting to, look at gold as an investment and investing in smaller quantities, but the interest remains strong.
But tell me, Saurabh, are you actually seeing impact of war oil prices being felt in consumer sentiment as well? We just got off a festival weekend with Gudi Padwa as well as followed by Eid then. What were the sales like?
See, Gudi Padwa, being the Marathi New Year, was a very strong day. It fell on a Thursday, and we as a company we did more than 170 crores of sales on that day. Uh, the interest on gold remains strong even as you're seeing today, but there is no flurry of people either who are coming to be a part of the gold or to exit the gold market. You're seeing steady investors looking at festivities, looking at wedding seasons, and I think the same thing will continue. And this is good for the market because these are consumers who are interested in gold as a long-term asset. They're not short traders, and this is what will keep the market alive, is what I think. But to answer your question, I think the interest among people is strong, and it will continue to be so as we move ahead.
Okay. And Saurabh, hi, this is Harsh here. So give us a
Yeah, Harsh.
perspective. How do you expect demand to work going forward, given the fact that we've seen a very sharp withdrawal with regard to gold prices? Do you believe that this is going to impact demand in any way, in a positive momentum, of course? And what's happening, and what would a customer who's sitting on gold, who's bought gold at, say, $5,000, $5,300 an ounce, what would that customer, or how would that customer react? You would have a great sense. Give us a perspective.
See, Harsh, right now we will start in the middle of the festive season and the wedding season. Akshaya Tritiya is next month on April 19th, and the wedding season is continuing March, April, May. So I think from that perspective, the demand is strong. People are doing the jewelry purchases. What we haven't seen is a flurry of people trying to enter the market at these low prices, because somewhere there's a fear that gold could correct a little more if the war spreads over for a little more time, and that has seen some people waiting and watching on the line. But like you rightly said, people who had purchased at higher levels are looking at the opportunity to balance their purchase out, and we're seeing a lot of people coming in the market both in gold and silver to balance their pricing. As regards new purchase, people are for investment. People are still waiting because they see a little more correction possible due to this war. But jewelry consumers, end consumers, are looking at this as a golden opportunity to make the purchases.
Saurabh, what one also has seen in the last 1 year or, at least last fiscal to now play out is that silver as well has been a very attractive proposition. Are you seeing a lot of consumer shift to silver as well? And what's happening now, given that that's a much more volatile commodity than gold?
The silver had been as you say, the bet of the year, almost 300% rise in silver prices during this year. Silver has taken a beating now, and a lot of people are looking at, adding their silver to their portfolio again to balance it out. So on Gudi Padwa, there were record sales of silver bullion. And I think silver is continuing to hold people's interest because the story for silver also remains the same. Silver has seen a lot of profit booking, which is why prices have come down. But again, silver at the consumer level still remains a very, very strong investment option.
And, talk to us about demand. How are trends shaping up? Is it geography specific? Are some of your stores doing better than the others? Is it across the board? Give us those trends.
See, gold jewelry demand is really driven primarily by festivities and by weddings. What we've seen now is that Gudi Padwa is more of a Maharashtra-centric festival. So in states like UP, Madhya Pradesh, we have not seen Gudi Padwa as a driver for sales. Akshaya Tritiya in next month is a pan-India festival, which should see sales from all the states of Maharashtra. So yes, to some extent, demand is seasonal when it comes to festivities, but weddings are common throughout India. And I think what is driving demand right now is weddings, which is the major driver. And I think that will ensure that the demand should remain strong. As far as the company, as a P&G is concerned, we think that we should be able to keep growing at a 25 to 30% growth over the next year as compared to this year.